Joining me is Conrad Saldanha, Senior Portfolio Manager of the Neuberger Berman Emerging Markets Equity Fund. It's good to see you, Conrad. Are you a hesitant buyer here or an enthusiastic one?
I think, Kelly, I think a lot of people, the way they've thrown in the towel with China, you're seeing it in the valuations, and it usually is darkest before dawn. We're quality investors. We're not momentum investors. And I can see that from a geopolitical standpoint, talking, through pension funds, hedge funds, investors internationally have given up. And I think that's what creates the opportunities where you've got either leading franchises that can be had at fairly attractive multiples, where the trade more recently has been for people. And as much as we love India longer term, that those monies seem to have come out of China and people are waiting on the sidelines. So just like you guys have just been talking about, Kelly, things look dire. The numbers are definitely softer. The V recovery has not happened. The government is acutely aware of that. And they're just battling the fact that they don't want to have a big stimulus like they did in 2009, that 4 trillion stimulus. How do they get people back again to spending instead of sitting in bank deposits? Given the youth unemployment, they're acutely aware of it, and I think it's one that creates that opportunity right now.
All right, so what are the stocks that you want to own here?
So Kelly, for us, if I think of that quality, good cash flow generative type businesses, leaders in their respective segments, Tencent is one that you showed up on the screen. I think they're monetizing. You've got social media. You've got the gaming side going for them. I do think that's one of those undervalued franchises. I like the services area generally too. If I think through travel, to hotels, and also when I just think of the beverage sector, whether it's beer, there's a premiumization story. The Chinese consumers haven't given up. You've seen travel picking up. So it's not just the luxury goods element that people have probably been piling money into internationally, but there are opportunities within that in China. Now, talking about a stimulus, I think you're starting to see more and more rumblings about new energy vehicles, NEVs.
Sure.
I think BYD is one of the best positioned businesses out there and probably disruptive in a global sense as well. So you're getting those opportunities coming through where the government will stimulate more selectively and much more on consumption, which is still resilient, maybe not as great as we saw in the V-shaped recovery for consumption in the West. But it still is happening. Yeah, go ahead. So it's still happening.
Yeah, I didn't mean to interrupt. I was just going to say Tencent, Alibaba, those look like stocks that you want to own here. Again, this is a story we're familiar with, but one that investors have been quite frustrated with in terms of performance. In your top 10 holdings, you also have quite a number of banks and even insurance companies in China. Would you recommend those positions to investors or more the kind of internet services?
So the internets are bigger weights. To be fair, in the banks, we have a regional bank, Bank Ningbo. So we are underweight the banks, but we've got a regional lender that is very focused. In fact, in our top 10, you'd probably find more of the Indian banks like an ICICI, where they've got a much longer runway and they've compounded returns very well. But I would be more focused on the quality franchise with the internet properties. And they realize that they're massively undervalued. They're generating gobs of cash flow, and they're willing to step in now finally, instead of competing irrationally, buy back their shares as well. So capital return is very much on the agenda for these franchises that we like.